traders, Jeff with optionboxer.com. Wanted to make one last kind of a bonus video for the how to trade options course that I posted yesterday or 2 days ago, I guess now. But I got to thinking about it, and it just didn't make sense, I think, for new traders to see, just me kind of rehashing what I've already written on my website. So I wanted to kind of look here at maybe a simulated live environment, and you can see I've got the thinkorswim on demand tool pulled up, and it's kind of slowly working its way through here. And I'm going to change this back to 8. Let's go 9 o'clock. And before I get into this, please know that this video is not, I can't stress it enough, not a recommendation for you to buy or sell any security. I am not a financial advisor. I'm a trader just like so many others, and I just love trading, and I like providing the knowledge that I have to those that may find value in it. But again, it's not a recommendation for you to buy or sell any security. You should always do your own research, or you should always contact a registered financial advisor, someone that's taken all the proper courses and exams and has the know-how and the experience to provide sound financial advice. I am just like anybody else. I'm a trader. I understand that when I put money into the market or when I trade options, that is a risk, and I could lose my money. In fact, many times I do, and you should also know that. So please don't take this as a recommendation to buy or sell anything. You're basically on your own if you don't contact a registered financial advisor. So I'll save any other thoughts about that for another time. But for now, what I want to do is, so when we looked at that how to trade options series, most of what I went through was just on my website. And let me pull this up here. And we kind of just went through the fundamental course, and we worked our way through. And it's sound information, and it's still applicable. I wrote this back in maybe 2016, 2017 time frame. And so it's still applicable information. It certainly tells you all the basics of how to trade options. If you don't want to read it there, of course, I went through it with the How to Trade Options series. But I just didn't think that was enough. I felt like I left new traders kind of, wondering if that's, good information or not. So what we're going to do is we've got a simulated live environment pulled up here, and I'm going to try to be very brief. And at this point, I've got Apple pulled up, but I'm just going to kind of scroll through here randomly and pick something. And so we've got Micron Technologies, I guess. I'm not exactly sure, but all the stocks that I have pulled up over here are, which I think I mentioned in another video, are liquid underlying options markets. And they're actually all liquid stocks, but for the most part, they're in here because they have a liquid options market. So Micron would be a nice candidate. And we'll just take a look here. We can see it's in a strong uptrend, possibly a slight pullback here. But the thing about this is it's in such a strong uptrend that it's above any previous high level. So let's auto zoom back out, and you can see it's even past these highs here. So there's really nothing standing in front of this from moving higher. Now I don't know what it'll do next. You saw how I kind of just randomly picked it over here on the, my watch list. So we're going to operate as if this thing will probably move higher. So that's kind of our assumption, just looking at the chart, and that's basically just me saying, okay, from left to right, is it going higher or is it going lower? And since it's going higher and it doesn't have any resistance level that we can see, we're going to operate as if it's going to move higher. So you can see today the overall market is down. We'll take a look at the S&P 500 on this day. Today is November the 9th, looks like, of 2017. It takes a minute to load up here when you're in the on-demand environment or on-demand tool on thinkorswim. So it looks like we had a little bit of a pullback here, but I don't see anything really scaring me away from being bullish on this particular trade. So let's take a quick look at the VIX. You can see the VIX spiked up here today, but of particular interest is it went considerably higher. It went all the way up to 1096, and then of course has traded lower throughout the day on November the 9th. So we're going to operate as if this thing is going to continue pulling back. I could be wrong. I'm probably wrong more than I'm right, but we're going to monitor the trade. We're going to set a stop loss, set a profit target, and of course we're going to try to let our winners run a little bit and try to stop out as quickly as possible. So in order to do that, let's go ahead and take a look at Micron again. You can see we've got a really strong bullish trend, and we haven't had much of a pullback in a while. Since looks like a couple of months ago it had a little bit of a pullback here and then continued this massive uptrend. So it went from as low as $9 or so all the way to a high of 45. So if you had gotten in down here, you'd really be thanking yourself. But we're going to see if we can't get a bit of a short-term uptrend here. In all honesty, given this huge trend up, you know, it might scare me away from wanting to get bullish now. If the trend was here, or, you know, maybe in here somewhere, it, you know, might be a little more confidence on my part. But for the sake of this video, let's just operate as if we're bullish. Try to get to 30 to, you know, I typically like to trade around 50 days, but I just don't think there's going to be any liquidity here on December 29th. So we'll have to probably go to 71 days out, which isn't my favorite, but we're going to look here. The next thing we're going to look at is we're going to take a look at the IV rank tool. And you can see that IV rank is fairly low. In fact, it's at 19% for this day, which is fairly low. And we're going to hope that maybe over the course of this, that either volatility remains a little bit flat or it increases. So we're going to trade a call spread. And we've got $1 wide and it's costing us 34. So let's make this a little bit wider. Let's go 46.48. And we're just out of the money here. So we're hoping this thing will pop up to around in the money. We're looking for a 4 or 5 point move over the course of the next 71 days. So it's going to cost us $65 to get into this trade. We'll go ahead and send it. We've got a potential upside of $135 since it was a $2 wide spread. And you can see here we've already profited $1.50. We can look at the monitor tab and see that. And so we're basically just going to fast forward here. So I'm going to change our chart to 1 year, 1 day, so it's a little bit smaller and a little more visible to us. And we're basically just going to skip ahead 1 week at a time and see if this actually does jump higher. Now, what I regret doing, so let's back up here. So I need to back up and pretend we didn't just see this bullish move happen. So I'm going to back up, go back to the day we were just at. And so what we want to do is we want to try to keep our stop loss fairly tight, and we want to give ourselves a chance to make some money. So let's put our stop loss at the low of this level. In fact, let me use a different tool. So we need a price tool. There we go. So we're going to put our stop loss right there, maybe just a tick or two below the low of this candle, just because it's the most recent swing low. And so if price does break below that, we're going to assume it might continue lower. So we're going to put our stop loss there, and our profit target will probably let's put it the next whole dollar at 46 and see if we can't get this thing to move up. So it's not exactly at 46, it's actually at 46.01, but you know, if this were a live environment, I'd have that, I could actually set this to 46 even. And push OK, and then of course now it's at 46. So we'll change this one to green, and this one is our stop loss here in red. So if it fell back below this, we'd get out. If it moves above this, we'll take our profit. So you can see now we're down by 50 cents, but remember I backed up in time, so it's like we just opened this trade. And now let's skip ahead by a week at a time. So interestingly, you can see today we actually touched our high price, and if we didn't skip ahead a week, if this were a live trade, we would have been able to get out on this day, but we're still kind of bumping into it here. And let's see what our profit and loss looks like. So we've made $22. You know, if this were a live trade, you know, we may have opened 2, 3, 5 contracts in this particular position. And if you did open more than one, now would be a good time to at least close 1 or possibly 2 of those, and then let this see what happens next. So the most prudent thing to do now would be to activate the price level there, and let's move our stop loss up, kind of protect our profit a little bit. And at the same time, since we technically have closed part of our position at the first profit target, let's move it up to the next whole dollar, which would be 47. And I'm not going to edit it, but we'll just keep it at 47 and see if we can't get this to move up, you know, just to make another little move to the upside. Of course, if it falls down below this, we pretty much I think we'll have made about a break-even trade if we consider our profit on the, let's say we opened 5 contracts and we closed 2 of them. We made $40 or $50 for those 2, and if it falls back down below here, we'll basically close the other ones at even money. So we'll pretty much be looking at a small profit, and we won't be risking any money. So our stop loss is still pretty tight. Probably need to move that just a couple of ticks lower than the low here, just to cut in case it tries to run up into this area. And of course, if it does, we'll get out of the position. But see if we can get a little more upside out of it. Let's go another week, see what happens. And so you can see we did actually get a huge move, blew right past our profit zone here at 47. And if this were a live environment, I probably would have taken my profit this day. But since we skipped forward a week, here on the on-demand tool, we can kind of take a look now at our trade, and you can see for every contract that we had open, we would have made $52. So if we had if we opened 5 contracts, we sold the first 2 for a $22 profit, and then we would have sold the remaining 3 for a $52 profit to leave us with one really nice trade. And so we'll go ahead and close this, and we'll try this one more time. So just kind of randomly pick here, what am I trading? So we'll look at the diamonds. It seemed like that was the first one I picked. The diamonds kind of trade pretty much evenly with the S&P. They track, I can't remember for this video, I think they track the tech sector, if I'm not mistaken, but I could be wrong on that. So to me, it doesn't really matter what they track. I mean, I'm mostly looking at the technical information anyway. So at this point, the first thing that I see is that it has broken out at least mildly above this kind of this past resistance. You can see it broke out and then it has fallen back down. So if this were a live environment, I would want to know what it's going to do at this level. Does it want to go higher? Does it want to go lower? So the next thing we would want to do is let's go to the next trading day and see what actually happened here. So you can see it still hasn't decided what it wants to do. So I wouldn't take this trade until I waited for it to tell me what it was going to do at this level. Is it going to go higher? Is it going to go lower? So we'll skip ahead one day at a time until the market tells us what it's going to do here. Give this a chance to load up. This video is getting a little longer than I wanted it to, but you can see it looks like it has the desire to move a little bit higher. So let's operate as if we're bullish on this. Let's take a look at the VIX. We can see the VIX traded way down here to 8, and then it moved higher. But one thing to notice is that it moved higher. It gapped open here, but it has pushed back down. So I'm going to assume that this is going to kind of tail off here a little bit to the downside and stay a little bit lower. And let's take a look quickly at the SPX. Take a look at the S&P 500. You could also use the SPY ETF for this particular portion of the analysis, but for this one we'll just take a look at the SPX, and you can see it is moving higher, and it has broken this last, kind of that resistance level there. And so let's remove that drawing, and let's operate as if this is going to move higher. So the first thing we need to do is we need to take a look at the diamonds and see where volatility is. So it's not showing up here like it would in a live market environment, but you can look at this yellow number there, and you can see that yesterday or the day before we were at 29%, which means 71% of the time volatility is actually higher. So we're going to operate as if this is a little bit of a lower implied volatility environment, and we're going to look to buy potentially a bullish spread. You could also, if you have the capital and you want to, you could also look to buy just a single call option, which we kind of documented in the How to Trade Options series. But I typically go with spreads just to kind of mitigate my risk a little bit, because if I bought this contract here for 268, if this moves against me, if it moves down to even where my cursor is now, you're going to be looking at a fairly sizable loss. But if we buy the spread, of course, our cost to get into it is a little bit less, only 41 cents in this case. Probably want to trade this about $2 wide, so it costs us 78 cents to get into it. And so that's about a third, about a third to, let's see, 7 times 3, about a third of what it would cost if we bought the contract outright. So we could probably even trade, just based on that math, we could probably trade 3 contracts. So let's trade 3 there, and it'll cost us 77 cents to get into it, confirm, and send it. So we're going to trade 3 contracts. The next thing we need to do is we need to identify a profit and a profit zone and a stop loss zone. So let's try to keep our stop loss relatively tight. That way, if it does move against us, we're not going to be too badly hurt. I'm going to zoom in a little closer here, just so I can get my stop loss right where I want it. And I'm going to put it just below the low of this candle. That is actually at a bit of a resistance level, and kind of looks like price has bounced off of that a couple of times and then finally broke through here, and we'll see what it does in the future. So we're going to put it just below there for our stop loss. If I can get this to click, that'll be our stop loss, and then we'll put our profit target up here at the next whole dollar amount, which would be 237.05. Let's make that green. And let's see if we can get a little bit of a push higher. And of course, if we get to this first profit target zone, let's go ahead and just make our second profit target zone here at about 238. Change that to green as well. In fact, we'll use this color green for that one, just to kind of make it a little different. So our first target window will be here at 237, and then we'll, maybe if we can get another push higher, we'll get the rest of our contracts closed up at 238. Now, kind of one thing I want to highlight here in this trade, since we are going to trade multiple contracts on this particular example, is if price struggles to reach this level and it kind of trades sideways and we do get eventually to this profit target zone, I would probably think to close all of them. Now, if price in the next day or two shoots up through here, then you can wait for profit target number 2, because you don't have as much doubt about it, I guess would be the right word to say. But if it struggles and chops along sideways without hitting the profit target or the stop loss, I would certainly think that if it does get here, to close all the positions, just because it's looking like it's having some trouble, and it may be kind of basing out for a move higher, or it may be kind of consolidating for a move lower. So just keep that kind of in the back of your mind as we move forward here. So we'll skip forward a week and see what it does. So you can see it had a huge move higher, and in fact blew almost immediately through all of our profit areas. So let's take a look at the trade, and you can see we made a huge profit in a very short period of time. And so we would close all of them at this point, take our money off the table, and walk away. So just wanted to make this video, and this is where I'll wrap it up. It's been a lot longer than I anticipated, but I felt it prudent to show you that, so that new options traders know that the information that I gave you is valid and it does work. Just remember, always keep your stop losses tight. And if you want to set the stop loss order and put it on the books, make sure you come through here and you actually set it here, and then just confirm and send. That way you don't have to stare at the charts all day. You can continue working your normal job, and if it does breach the level that you've identified to start with, it'll just close it out. You'll take a small loss and you'll look to get into a new trade. So that's kind of it for this video. If you have any questions, feel free to reach me at optionboxer.com. Thanks for watching.